right. All right. Welcome everyone. All right, so we have a pretty short week ahead of us, and I want to go over kind of what the markets have been telling us and how we were correct into identifying the underlying indications that the markets are potentially about to roll over and head into this potential weakness, right? This window of weakness that everyone has been talking about based on seasonality, right? So first of all, I just want to look at the S&P. Okay. All right. So I typed it in chat there for you guys to know what I'm looking at. So SPY here, it closed below the daily 10 SMA for a second time since last Tuesday. So off of this CPI print candlestick. And so it's pretty interesting to see that we have closed below a second time in just a couple of trading days, in between 3 trading days. So this is telling you that there is weaker momentum to the upside, right? That's the first thing. Now, the second thing is that we have reached back down to around this 494.50 demand area or support level on the daily time frame, and we held it once more. But again, this is our second time hitting it since our first time was on Wednesday of last week. So if we penetrate below this specific level, we will most definitely hit my next momentum, my short-term momentum SMA, sitting at 493.04, or simply called the daily 21 SMA, right? My light blue line. So the fact that we're starting to retest the daily 10 and daily 21, and now we're breaking below the daily 10, and we're about to retest the daily 21 SMA, things aren't looking too bright in the near-term future, at least the short to mid-range perspectives here. But again, so far, the S&P 500 has been following this exact price path that I've drawn here, this kind of general price path. I mean, last week was absolutely on point. I drew this price path right after the CPI day here on last Tuesday, and so far we've been following it to a T. But today's price action may have just completely disregarded the last half of this price path drawing that I've drawn, and I've also mentioned it to my members last night in the private technical analysis video, that we can be seeing a potential double top here at this 503 resistance level. Okay, and I also warned them that there is also another possibility that the market can completely screw the shorts and bulls even more by making another all-time high move sometime this short week, and then pulling the rug out as we head towards the end of this week and into the last week of February, which tends to be the true week of weakness as we head into March, right? And if that does occur, if the responsibility of being a lot weaker in the overall markets decides to go towards next week, the last week of February, we tend to see a lot more weaker month of March. So that's going to change some things slightly, especially my own perspective on what could happen in March. But I will delve into that more in the Market Trends newsletter, which you guys should be subscribed. But if you guys aren't subscribed to that monthly free newsletter, please let me know and DM me on Instagram. So again, the S&P 500 definitely seeing pockets of weakness everywhere today. We were correct into, as the title says, into hedging with SQQQ and SPXS. We've been talking about this for the last almost 2.5 weeks now, but we've been actively in these two tickers for the past 2 weeks, and it's been an absolute a safe haven, if that's the correct word there, for people who have been net long. And so as long as we continue to monitor what happens with the S&P 500 here, SPY has closed over again the daily 10 SMA for the second time in the past 4 trading days, including last Tuesday. It truly feels that sentiment-wise that we're about to see this complete shift in momentum from bullishness to bearishness as more of the FOMO buyers at these all-time high levels slowly kind of calm down their purchasing, right? And eventually, if there are more FOMO buyers later into this week, they will get completely rug pulled as we see the market makers just starting to really push the markets into that window weakness, into that seasonal weakness, and that on average into March. So again, the S&P 500, it looks like we've been correct so far after a price action like today. We're seeing the dollar, right, the US dollar, kind of making a slight move down today, which is pretty interesting, but it's still holding over its daily 21 SMA, and it's now stuck in between the daily 10 and the daily 21 SMA. But the one thing that you guys have to consider is that it's above its daily 250 SMAs. So that is concerning. Now, even more concerning is the 10-year yield. All right, so again, I drew this arrow, I think, back in last Friday or either on Monday, if my memory serves me right. It doesn't really matter, just 2 daily candlesticks here of a difference. But either way, what I'm trying to get at here is that the bond yields are still moving up higher, and now they're constructively consolidating here at its current highs, its short-term highs, and there's a chance that it can continue to move up higher by making higher highs and higher lows. And as you guys know, that's not good for bonds, right? TLT or IEI. All right, TLT is the 20+ year Treasury ETF, and IEI is the 3 to 7 year Treasury bond ETF. And both of them do not look good. Now, for commodity sides, gold, right, is a major ticker. Gold is not, it's, in relation to the US dollar, right? It's not going to be looking good in the short-term future as well. I mean, we even saw some, I believe I saw some put activity in the options flow as well with gold coming in later on the day today. So, with gold it's been kind of volatile here. I mean, the dollar has been moving up higher, so gold will tend to move lower. So today it had its retest at the daily 50 SMA, so that's not too good either. It's still staying under the daily 50 SMA, and it rejected again today. And as long as it continues to stay under the daily 50 and continues to break under 187, it will continue to look like a good short to me, right? And as long as the dollar continues to move up higher, which will also not be good for equities. Okay, now I want to talk about IWM and MDY, but specifically IWM. So the market breadth today was so-so, right? It wasn't too weak, it wasn't too strong either, but it was definitely showing that there are pockets of weakness that we're continuously seeing, and the market can move into that larger pocket of weakness as we head into the end of this short week. But IWM actually held up quite well, which is the reason why I think as long as IWM continues to stay over its daily 10 and daily 21 SMAs, but most importantly, it moves further away from its daily 50 here, as it just caught up very recently, just in this month, and even in January here, mid-January, there's a good chance that we can quickly move away, because that is the goal. Whenever the price comes back down to retest major SMAs like the 50 SMA, the goal of the price is to move away from these major long-term moving averages. And hey, what's up, Joel? Just saw your message, and 4 likes. Thank you guys. Let's try to get to 10 likes as usual. If you guys are enjoying this content, of course, make sure you guys smash that like button down below. And obviously subscribe, as it will help very much to the channel. So IWM overall breadth today again, it was so-and-so, and it's still showing weakness. And IWM and MDY, right, small and mid caps, are kind of the major pinpoints that everyone has their eyes on to kind of gauge what's happening underneath the surface, as more of the leaders today finally saw some really solid weakness, and even after hours, as software names really got pounded from PANW, right? Earnings. And I think this one closed like at 290 after hours. I mean, that's a large move, right? From close, what is that? Yeah, it was more than 20% here, right, of a move to the downside. So, with leaders continuously seeing weakness even after market close today, it's gonna be really much up to the strength of IWM and MDY, the small and mid caps, to really show whether or not we're gonna be seeing that switch, that kind of a rotation from leaders to laggards, or basically the large tech stocks or mega cap stocks into the small to mid cap stocks. So again, IWM on the weekly or even on the monthly, it looks really good. It's been making some very constructive moves here. Yes, it's been range trading so far. We've been kind of moving sideways, but we need to welcome that, right? We want to see that, especially right as we're staying underneath the weekly 200 important whole number level here, right? $200. So again, I believe I stated this, I think last week or even last week, then IWM still needs the weekly 21 SMA to catch up. And so far we've been curling up higher, but rather slowly. So that makes me wonder if we're going to have another move down, something like what we saw right here when we first broke over the 200, and obviously it was too quick and a bit too overextended after what, 1, 2, 3, 4, 5, 6 weeks of straight move to the upside, right? So again, IWM, there's a chance that we can definitely see another move down this week and possibly get tighter and tighter and tighter until we're able to finally break over, okay, the 200 resistance level, right? So it'll be amazing to see a potential bull pennant to play out as we wait for the weekly 21 SMA to catch up on the weekly time frame. But overall, this is kind of what I'm expecting to see as we continue to kind of teeter around and play around with this $200 level, slowly pushing out the weaker buyers, slowly pushing out the short sellers, and eventually being able to see a large move up towards that 209 to 216 price range area that I've been really looking at for the past couple of months and even last year. So IWM is definitely going to need some great patience. All right. So again, actually, let me just keep that. So again, for IWM or MDY, right, they're both just really kind of going nowhere, and I expect them to go nowhere for the past couple of for the next couple of weeks. Excuse me. And eventually, once the overall market pivots, I expect IWM and mid caps, MDY, to actually have an earlier pivot, right? And the reason why I say that is that, well, if we do see that kind of a money rotation from the larger cap stocks or larger tech stocks, especially the localized, specialized group of leaders, these mega cap tech leaders, if we see money rotating out from them, as we're seeing now, and into these laggards, or specifically these small and mid cap stocks, we can see them having more relative strength throughout this potential market correction that we can be seeing. And we can be seeing the specific small and mid cap stocks seeing an earlier relative strength move to the upside, and potentially a lot quicker move to the upside compared to the overall markets, right? So that's kind of my I guess future assumption of what could happen with IWM and MDY. But overall, I think SPY here has a lot more room to move to the downside. Definitely can see a retest of 477.50. This is what I told my members last night. And this is a pretty much, if you round up, about a 5% move down from the current all-time highs. So that would be a pretty textbook pullback. But again, if we see weakness around 477.50, and if you don't hold, we can make another lower high pivot point at 477.50 in the near-term future, and we can go down to 460, which that would be about 8.50% move to the downside, right? And that's nearing that textbook 10% value for a textbook pullback, right? So 477.50 and 460 are the major levels on the weekly time frame that you guys should be looking at for SPY for potential short targets to the downside. All right, so again, this entire bull market is ready and has been showing signs for all my members here that I've outlined for the past couple of weeks. They've been currently really just pushing and gunning for the markets to make this overall move to the downside. So we have to wait and see now to see whether or not the price will be able to break under the daily 21 SMA after closing below the daily 10 today for the second time, right? For the second time. So again, you guys have to watch out for all these different indications throughout the market. Obviously, I'm not showing you guys exactly what I show my members here. That's reserved for the private members and students. But you know, with the S&P 500 here, it's essential that you guys understand where I'm coming from here and why we need to be looking out for these specific indications. Because again, we've moved so much from October's lows, right? We have left so many gap ups as well, which will eventually be filled, you know, later down. I would assume at least a year down the road we can potentially see these gaps being filled, because again, the S&P 500, the overall markets will always fill in its gaps 100% of the time. All right, so you guys cannot forget about these gaps that we've made since October's low. All right, now another key sign, I want to end off this live stream with this, is these really highly shorted stocks have been performing really well today. All right, and especially like Carvana. Yes, it did close negatively on the downside today, but on the candlestick side, just from the observational standpoint here is what I would say. It looks great, right? Numbers perspective, it doesn't look good, but from an observation standpoint, we saw a nice push from it being a red candlestick to now more of a green candlestick, and we closed with a nice small hammer candlestick. Now, I don't like the fact that we've broken to the downside below the daily 10 SMA, but you know, stocks like this one, Carvana, a highly shorted stock. All right, I believe the short interest percentage is at what, 44% still, which is very high. And you know, this one has all the hallmarks of a potential short squeeze into the upside, obviously, and into earnings, right? Earnings is on Thursday of this week, so it's in 2 days, right? So there is a lot of potential for this one to have a nice short squeeze into earnings, or even during the earnings reaction itself, right? So I believe Carvana is going to have to do a lot of different things to really take out all the shorts that are in this name currently. But again, this is one of those few names that have been doing well while the markets are moving down. And again, that's another very simple and surface level, I guess, key pointer to really tell you where the market stands right now, and where the momentum is currently at for the overall markets, right? So again, when you see these crappy companies doing well while the market is down, that's telling you that the market is weak. All right, it's a pretty simple indication to use. Another one to be looking at is Hood, right? Robinhood, HOOD. This one was also very strong, and it's continuously holding up after this earnings run up. and gap up, and it has not reached back down to its earnings day reactions low, which was last Wednesday. And in fact, on the weekly time frame, this looks like a really good potential short squeeze to the upside for a potential even retest to $17. All right, so this is, I mean, this one has been making a multi-year base. All right, and it's now just starting to peak over its major resistance level at $13. So, you know, I think this one has a lot of potential as well as a crappy company too, and with shares kind of down in the trash bin here. It's still down in the trash bin since we haven't really seen a very major reversal move back to the upside, and I believe the short interest percentage on this one, let me see here. Yeah, so the short interest percentage is at 5.45%. That's not too high, but again, that's enough, right, that we can work with for a potential continuous move to the upside. I wouldn't say there's going to be a short squeeze in this one. I mean, the only catalyst that can really give us that is already passed, which was earnings, and it's already had a nice move, had a 13.01% move on the earnings day candlestick, right? The earnings day reaction candlestick. So, you know, this one can continue to trudge on up higher slowly with some good volume. Right. The last one that I want to take a look at is LMND, Lemonade. So this is the popular, well, it was the popular, I believe, insurance company, right? If I'm not mistaken. Yeah, property casualty insurance. So LMND is also a very, very highly shorted ticker here. I believe the short interest percentage is at 30.39%. And this one has been moving sideways for about 16 weeks. Right, it's moving tightly for the past 16 weeks, and we have earnings coming up next week. So this one has a catalyst coming up that can provide enough fuel to run to the upside into earnings, or potentially as the earnings reaction to the upside, right? So it can provide a lot of short covering on the actual earnings reaction day. So again, this one is looking very, very constructive leading up into earnings. And if it can really get out of this consolidation over 18.50, as it says here, we can potentially get away from all the moving averages that have also tightly coiled up due to this consolidation for the past 16 weeks, and we can rocket up higher. All right, so I'm long on this one so far. I may be, giving a few tips and pointers to my members tomorrow for a potential position, but this one's highly not recommended. It's a huge risk here, but there are all the hallmarks of a potential short squeeze on this specific name, because again, we have a potential catalyst coming up, but overall, I think, just a day like today, right, on the daily candlestick, right, very, very strong. Right, it barely moved to the downside pre-market, and it continuously made its way up until it reached and broke over the previous day's candlestick's high, which was at 17.89, and today was 17.91. So by a couple of cents here, it was able to break over the previous high of the day. So clearly there is strength amongst these very, very highly shorted stocks, which is again a key sign or indication that the overall markets are weak. And again, today was clearly a sign of that, as we made a nice gap down and pre-market, and we continued to move down, and we weren't able to overtake the daily 10 SMA and eventually cover and fill in the gap down. All right, so that is it for tonight, guys, and for everyone who's joining in. We're about to finish the live stream here, but welcome. Make sure you guys watch this entire live stream from the beginning to the end. All right, it's only about, well, it's less than 30 minutes here, so make sure you guys watch it. I give some pretty good pointers into what you guys should be expecting into the end of this week and into next week, because again, it's a very short week, so next week is very, very important. I kind of give you guys a reason why. So make sure you guys watch the recording here. All right. So hopefully this was a great live stream for you guys to really get a good sense of what you guys should be looking for and how you guys should be navigating yourself in this current market price action. But overall, hopefully it was a very insightful and most likely an applicable live stream. That's always my goal here. So I'll see you guys on Thursday at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time as usual. Thank you guys for the likes, the subscribe. Right, so thank you guys always for hitting the subscribe button and obviously hitting that notification bell button as well. All right, have a great rest of your night, and I'll see you guys on Thursday.